Hi guys, I just hope you can hear me clearly with this stuff. I've been trying to record this thing with my PC screen recording, but it's not working. So I just came up with this idea. I think this will be better for us because this way you can hear me clearly. I don't know what's wrong with this my PC mic. So quick one right here. And please, this phone this recording won't last for long because I'm using my iPhone to record, and if I record for 15 minutes, this storage space will be 2 gig there and above. So I'll just make it short clip so you'll be able to download it. So we'll be talking about market structure. I don't know if you guys haven't studied anything or watched any video about market structure. We all know in the forex market, when the market wants to move from, let me say the market is in an uptrend, the market wants to move from this point right here to this point. It won't just move like this per se. The market won't just create a long candle and move like this. Although in some cases it might happen, but if this happens in the market, it is considered as imbalance. We won't talk about that for now, but this is usually imbalance if it happens. So what we know the market for doing is, when the market wants to move from point A to point B, the market usually creates series of higher highs and higher low. When it is in an uptrend, it will create higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is what we know the market for, guys. We know the market for creating series of higher highs and higher low when in an uptrend, and series of lower lows and lower low and lower high when in a downtrend. So for instance, let me say the market wants to move from here to here. The market won't just move like this. The market always moves in this pattern. This is the correct pattern of the market. This is the correct movement of the market. So if you want to take advantage of this movement, you always wait for the pullback. For instance, if you want to buy this market, you won't buy this market from here. You will always wait for this pullback to buy from here, because you all know that when the market is in an uptrend, we buy, then we sell when the market is in a downtrend. So when you want to buy in an option, you wait for this pullback, you buy from here. You always wait for this pullback. And where we spot this pattern is always in the daily and in the 4 hours. For instance, let me show you this trade that I took right here that hit my TP, and this is in the 4 hours. I saw that okay, the market broke structure here, and the market is ready to buy. Let me clear everything so that you see it clearly. The market is ready to buy. You can see when the market create this first higher high, the market came down, create this higher low. The market create another higher high again. The market came down, create this higher low, create another higher high again, breaking this structure. So I now wait for the pullback. You understand? I now wait for this market for the market to pull back to this my other block before I now took the buy from here, and as you know, I close my TP here. So this is always the movement of the market, and as a trader, you always wait for that pullback. Wait for the market to give you that pullback, because when the market is moving like this, let me say this is a 4 hours, you wait for the market because when you go down to the lower time frame, you see stuff like this. The pullback will be the pullback might be like this. You might see something like this. Big structure. Sorry if you can't see this stuff clearly. I was supposed to record this stuff directly from my screen, but I don't know. Somehow the volume is not clear. The pullback will always be like this. In the lower time frame, you see stuff like this. So when you want to take advantage of the movement, when like the market create this high, you wait for the market to like break this structure here. You know that okay, the market like the pullback is over, then you wait for a retest before buying the market up, taking this previous high out. Just bear with me, guys. I'm just not used to this new style of setting on my screen, so I'm not comfortable, but let's just manage at least for now, while we figure out a way to like clear that stuff. So when you see this pullback, okay, the market is like retracing back. Okay, for instance, let me say here, because when the market moves, the market always creates imbalance. Let's just say we have something like our order block is here, we want to buy from here. When this market gets to this place, let me say in the lower time frame, we have something like this. We have something like this in the lower time frame. Yeah. So when the market gets to this zone, you know that okay, this is when we are interested in the market. Okay, the market have gotten to our point of interest. We want to buy from here. We'll wait for the market to form a pattern like this. Let me something like taking down this low, then breaking this structure. We know that okay, the market is now ready to buy because like the retracement is over. Then we'll wait for the market to come back, giving us this structure before we now buy the market up to this place. But this movement must happen in our higher time frame, either in the daily or the 4 hours. Sometimes we might like spot this our like huge, because this is a real market movement. This lower low, this is a real market movement. Why this? We can look for these entry opportunities in our lower time frame, because these are just the entry opportunities. When we go to the lower time frame, these are just like our entry setups. We can look for them on the lower time frame. Why these movement are the major movement that we are looking out for in the market. When like you open your chart, first thing you take out for like what is the market condition. Like is it in an uptrend or downtrend, or is it a ranging market? The ranging market is stuff like this. When you have something like this, this is a perfect example of a ranging market. The market is neither going up or down, it's just ranging in a particular zone. This is a perfect example of a ranging market. Me, I don't trade the ranging market though, but some people do trade it, but I don't trade the ranging market. I just stay off if I see something like this on my chart. Why this is a perfect example of an uptrend. So when you see anything like this on your chart, you know that okay, you wait for your pullback to look for your buying opportunities to buy the market up, but clear the previous high that you have here. Your TP must be above this previous high that you have here. But sometimes you might get out of the market early, depending on the market condition. I'll show you one example that we have here. How I caught this buy. The market was in an uptrend. I saw okay. The market, first of all, the market was in an uptrend. I saw this high here. I saw this high. Then the market came here. Then the market broke this little zone here, creating this high again. The market came back, came all the way up here again, creating another high again. Before it now formed this zone that we took this buy that I took the buy from. Before after the market formed this zone, it now broke this previous high that we have here, confirming that okay, this zone is valid. And you can see the market came back to our zone and we took our buy, and the thing went straight to our TP. It's as simple as this, guys. Although we'll talk about discount and premium in our next class. My next video I will explain discount and premium. You know okay where to take your buy or where to take your sell. But in this video I'm just explaining the market structure. The same thing happened here. This one is still fresh. You can see the market the market is still in an uptrend. It broke this high here. It came back for this zone. And it's still buying, guys. You can see the reaction from this zone. It's still going up, using all these places as liquidity. The market is still going up. If you took this buy from here, you would have been in profit by now. And the market will still come up to clear this zone. It's as simple as that, guys. Then while in the downtrend, let me explain the downtrend. Let me take this one out. So when in a downtrend, you can see we have break of structure here. And in that, when we are discussing that this kind of premium, we'll also talk about break of structure and change of character. Whenever these are all break of structures. These are all break of structures, guys. So when you're like, when the market is in a downtrend, what to do if you see any break of structure? The second thing you do, your first thing is to spot the market condition. When you open your chart, the first thing you will do is to spot your market condition. Is it in a downtrend, uptrend, or is the market ranging? To me, if the market is ranging, I will just leave the chart and open another pair. But if the market is in a downtrend or uptrend, I will first of all mark out all the break of structure that I have in the chart currently, like I did here. Then you start looking for like your demand zones, where you have where you want to sell from. Then you mark out your demand zone where you want to sell from. Then you wait for price to come back to your zone. Like from here, you wait for price to come here, then react. It's as simple as that, guys. You just wait for market to come back to your zone, then react. And whenever you take your trade, you know that okay, you are clearing the previous low or the previous high. Like here in a downtrend, you clear the previous low, while uptrend you clear the previous high. I think that's all for my